You are listening to chartingwealth.com for Monday, the 1st of February, 2016. What do we have going on? Well, we always start with IYY, which is the U.S. Total Market Index Fund for the Ishares Dow Jones. It's an exchange-traded fund, and it tracks the whole market. What's going on in the whole market? Well, we're entering our sixth day or so. Originally, it was for the first four of those 6 days. It was pretty much sideways sliding. On Friday, it was a big up day in the market on the 29th of January. And what do we see occurring? Well, there is not a crossover going up yet on the MACD, but it does appear to be moving toward that. Until that happens, we of course do not call it. However, it does appear to be getting close. The move, again, not a huge surge up. Again, it hasn't recovered as to where the market started moving down on the 19th of January. Of course, nowhere near when it started moving down big time on the 4th of January at the beginning of the year, the first day that the market opened. But our two-day chart does show lots of up movement. On Friday, 2.34% for the total market. Now, if we revert back and look at our 4-hour or half-day chart, what do we see? We see it continuing to move up. It actually started its crossover going up back on the 21st of January, and then went up for a few days until the 25th and sort of slid sideways a little bit, down a little bit on the 27th or so, starting actually on the afternoon of the 27th on into the 28th. And then on the 29th started moving up pretty substantially throughout the course of the day, both in the morning and the afternoon. So we have a short chart that's climbing. We do have the Bollinger Bands getting toward the top of our volatility bands, which have not really expanded at all. In fact, they've shrunk up even more. But we shall continue to watch what's going on there. Positive gains on the derivative oscillator, and we see a diverging of the MACD and the signal line, the moving average convergence divergence, which is the big indicator we use. We could use 100 indicators. We try to keep it simple, stick with the one we like the best, and tends to be the most accurate in a moving market. In a sideways sliding market, MACD is not always that good, but we've been having a market that's been moving around. Now, that's where we are. Again, not yet crossed over going up, waiting to see if that's going to happen on the two-day chart. Still looking to see if it's going to be a dead cat bounce and a rollover. We'll see how the week starts. We're going to record our weekly review and forecast after we prepare this show. So if you've not listened to it yet, when you hear this one, it should be up by the time you listen to the Monday daily review. Now we're going to move over on our two-day chart to SPY. What is that? Well, that is the Standard & Poor's 500. It is the SPDR's exchange-traded fund that tracks the Standard & Poor's 500, which are 500 big companies. A lot of the volume of the market looks somewhat similar to the total market, but not the same. Still not crossed over yet on the MACD, but appears to be converging for a potential crossover. Big shortening of the derivative oscillator on the last two-day chart. And again, the market slid sideways between the 21st, that candle, two-day candle, and the 25th of January, and then started surging up on that last 29th candle, the candle for the 29th, and again, two-day candle. So we still don't have a confirmed up move on the big chart. If we go back and look at our intraday moves, what do we see? We see, again, a crossover similar to the total market back on the 21st. Went up until about the 25th, slid sideways, down a little bit around the 28th or so, and then started shooting up actually 2.44%, so even more than the total market did. The SPY climbed on Friday. That is where we are, again, waiting to see if indeed we've got a confirmed up move on the two-day chart to match the 4-hour. If not, and the 4-hour starts to roll over, then of course we'll look for a downward play. Now, let's go back to our two-day chart and go to the Qs, up 2.09% for Friday. And again, Qs is different. It is the NASDAQ 100, okay, technology stocks. Looking somewhat similar, trying to move toward a crossing over. Hasn't happened yet. Derivative oscillator losing speed. We'll see if indeed there is a crossover going up. Remember, We don't tell the markets what to do. The market tells us what to do. Again, 2.09% gain on Friday. If we look back at our 4-hour chart, we can see that bigger up move in the afternoon and up move in the morning after the market had slid sideways for a little while and down. Then on the 29th, that sort of petered out on that down move around the afternoon of the 28th. And then on the 29th, two up moves both in the morning and in the afternoon. Derivative oscillators also started gaining some speed after it had been losing it. Again, we'll watch as the week opens, see if it continues to climb, or if this is the dead cat bounce we've been talking about the possibility of, and if it rolls back over. That may particularly happen if the markets are lackadaisical and there's some bad news or something coming out, or the people who've helped the market climb feel like they've recovered some of their losses, sell out, and watch it roll back over. We shall see. Now, lastly, we're going to range out to our 2-day chart one more time. We're going to go to gold. Interesting, gold was up for the day with the market surging. Gold was still up 0.38%. Actually up a whole lot more. We'll look at that when we go intraday, but let's look at what's happening with gold on the 2-day chart. Crossed over going up back around the 16th of January, really slid sideways for a while, took off around the 5th or so, and then sort of rolled back over and then took off again around the 21st and continued to move up. Now the last candle we have is actually a red open box, and we're going to delve into that a little bit more. And we really don't have a coming together of the MACD. The derivative oscillator is about holding its own. But if we revert to the 2-day chart, from the 2-day to the 4-hour, let's take a look at what happened. We saw the market surge up in gold starting on the 25th, and it had actually crossed over on our 4-hour chart back around the 20th, and then lose some of its steam. And actually, derivative oscillator crossed over Friday morning, and then gold gained some in the afternoon, along with some morning gains after opening where it did. So we'll continue to watch gold. We do see the 4-hour, and this is, again, if we've got a market that's actually moving, and we're feeling better about our 4-hour chart, having worked for us back on the 20th, and worked again back on the 12th, and worked again back on the 4th after it betrayed us in December, where the market was sliding sideways and the MACD wasn't working very well on the 4-hour chart. Started working again, so we hope we're going to continue to see that. If you are in a gold move right now, an up move in gold, be careful of a potential crossing over going down on the 4-hour chart. So just keep an eye on that. The 4-hour chart's been working for us. Derivative oscillator's already flipped over. So watch the markets as they open on Monday just to see what's happening with gold. If the markets continue to surge, what could you expect? Well, gold typically runs inverse to the market. It's a safe haven, or has been in the past. It's not like it used to be. Gold appears, I think, is manipulated and toyed with quite a bit. It is not always the hedge to the market that one might hope it would be. But that is where we are getting into when we jump into the markets on Monday morning. That's how the days were affected over the course of the week, particularly on Friday on our 2-day and our 4-hour chart. Hope that you're looking forward to a great week as you continue to do your virtual trading. Remember, we're not a stock calling service. We don't tell you what to do. We simply try to educate you so that you can learn, and then when you get competent and confident in your own abilities, you start making decisions for yourself. Thank you so much for joining us. You have questions, concerns, problems, we love to hear from you. You need more education, we're happy to record those videos and put them up for you. Tell us what you need. Go to chartingwealth.com, sign up for our newsletter. You'll get our daily reviews, plus our weekly review and forecast. It comes out every Sunday evening, and we hope you find that helpful. Thank you so much. chartingwealth.com. We're always happy to be here for you.